What's going on, guys? In this video, we're going to be talking a little bit about prop firm trading. So I am a funded trader with multiple different prop firms, Apex Trader Funding, Top Step, as well as Surge Trader. I use multiple prop firms to kind of spread out my risk, right? So I get multiple funded accounts, 50,000 here, 50,000 here, 50,000 here, kind of spreads my day risk out. I'm able to kind of work a little bit better that way, and I can take out multiple withdrawals. I don't have to worry about, trying to make $5, $10, $15,000 on one account. I can focus on making $1,000 on this account, maybe $1,500 on this account, another 500 over here, along with my options trading. Works out really, really good. That's not what the video is about. What the video is about is prop firm trading, futures, how to use supply and demand. Okay, so we're going to use supply and demand to trade these futures, whether you're going to pass an evaluation, whether you're currently or newly funded, and how to keep that account. We're going to be looking at the ES. I chart everything on the ES. I chart everything on the NQ. Make sure, though, when you're going through a combine or an evaluation that you're trading micros, okay? There's a lot of risk attached to ES mini contracts and NQ mini contracts. Just do yourself a favor. The amount of profit is not going to be as big trading micros, but you're going to be able to take more trades. You're going to be able to learn about yourself. You're going to be able to learn your strategy. You're going to be able to focus on your risk management a hell of a lot better than if you just jump full force in trying to make, $3,000, $4,000 in one day trading these mini contracts. So we're going to go through here. I'm going to just pull up today's data. Being that I am a scalper when it comes to trading futures for the prop firms, I'm just looking at today's data. I just want to know, what do we got going on today? Where can I potentially make some plays, and how can I play this into tomorrow? So if we kind of look at where we opened the day today, we look at this bottom tick here, 41.20. We put in a day's low at around 41.12. There's an 8-point move there. You can see we also came down here into this 41.25 area one time. So we've got a bit of a demand zone here building up in this block. So if I kind of just, I'm going to just do this along with you guys. This is exactly how I do it, right? So I'm going to take this block here. I'm using the Thinkorswim platform. Again, even though I trade with the prop firms, I still do all my charting on Thinkorswim because I trade options on here. I'm already looking at this chart. I just execute with those other platforms. I don't really need to chart with them. So what I'm going to do is I'm going to draw a block here. This is going to be my demand zone. I'm also going to change the color to green. Green just helps me kind of identify, okay, we have buyers in this zone. So anytime we kind of get into this zone, I need to be thinking about potentially buying to the long side, or waiting to see if we break down below that, and then potentially I'm going to have a short position. Now, my top upper supply is going to be the day's highs at around 41.73. So what I'm going to do is make another box. I'm going to make this box red. I want multiple touch points up in here so you can see realistically when we were flagging in this area, multiple touch points in this area. I'm going to kind of show you guys. I'm going to drag it to the top wick, right? So I'm going to put this here at the top wick. And then I'm going to include multiple touch points on these body candles, okay? So realistically, we've got a zone up here, and let's make this red. We've got a zone up here, okay, between a price of around 41.67 all the way up to around 41.73. So perfect areas here. We know this is our top supply. In order for us to get any type of continuation, we're going to need to see a breakout, put in a new high, back test this zone, and then push out of it. We'll take longs off that. If we do lose this bottom demand zone here, we need to put in a new low. We need to back test into the zone, get rejected, and then when we come back out of the zone, that's when we're going to go ahead and take those short positions. Now we're going to have some little mini channels in here. You can see we've been making lower high after lower high. If the day's kind of setting up the way that it looks, right, the way that it's been going, okay. So if you look at our initial high here, lower high, lower high, lower high, normally this signifies that we're going to be coming back down. Now, if we're going to get some sort of change in trend, we're going to need to get over this last previous area that acted as a high point here in an area of resistance. So what I'm going to do here, if you kind of look at the top supply to the bottom demand, this area here that gave us this last recent high point is almost about 50% in the middle. So anytime it's 50% in the middle here, you have to be thinking about this. If you are buying, right, because you're respecting the day's trend and you're buying long down here in demand, when we come down into demand, you're buying, come down into demand, you're buying, You want to be thinking about selling when you're getting into the middle of this zone, okay? We're not going to buy demand and expect it to come back up here, because the minute you do that, you're going to put in a pop, it's going to come crashing right back down on you, you're going to lose a bunch of money. The minute you sell here, it's not coming all the way back down here, not in one go, not in one candle. It might come to the middle, chop yourself up, come back up, maybe you get stopped out and then come down, okay? So anytime we're shorting up here, we want to be covering in the middle. Anytime we're buying down on our day's demand, we want to be selling towards the middle. So anyone who did take this green candle here at 10:45 a.m. Pacific Standard Time, reason why we came down to the bottom, tested this demand zone, bounced, got a green candle that took out multiple red candles here, aggression on this candle. As soon as we popped up here, you want to be selling into this 20 SMA, okay? Hold a runner, hold some of that position, because if we do break this 20 SMA, we've got a little bit of a gap to fill between the 20 and the 200. Now, I love running the 20 and the 200 just due to the fact that it provides very, very good support and resistance levels in between the major days supply and demand, okay? So you can see here we're consolidating, we're flagging right under this 200-day moving average. Now if we do get a pop over this 200-day moving average, I would expect the price of 41.36 all the way up to at least 41.40s. So maybe we're going to get 5 points there. That's a 5-point move depending on if you're playing ES or minis or micros here. 5-point move on the ES, playing minis is a hell of a trade. Again, if we do get rejected here, let's say we put in a high, never confirm that high, start to come back down, we do got a range from 41.36 back down to 41.26. So there's a 10-point gap in this move here, and anything below 41.26 has room back down into our demand zone, low point being 41.12 to 41.20. So remember, when you are focusing on prop firms, when you're focusing on challenges or evaluations and you're trying to get funded, the name of the game is to stay in business. You don't want to hit your daily loss limit. You don't want to hit your trailing threshold. What you want to do is slowly build that account. Now, many prop firms now, they don't have restrictions on how much time it's going to take for you to actually pass the challenge or the evaluation. If it takes you 30 days, it takes you 30 days. If it takes some people 90 days, hey, well, guess what? You're going to get a hell of a lot of trades done in those 60, 90, 30 days, however long it takes you to pass. The whole goal is to pass. Now, whether you're putting up $50 for an account or you're putting up 100 or 200, depending on which prop firm that you're going with, they all have different prices. As long as you can take a return out on that initial investment, that's how you have to look at it. So a lot of times people will kind of analyze this and they'll say, well, I've got a $50,000 account. You know, I only made $500. It's not worth taking out. They take more trades, they go on tilt, they lose it all, and they blow up the account. When realistically, you have to look at it as, if you just invested $100 into a specific prop firm, you got funded, you're up $500, you're able to take a withdrawal in 30 days, 45 days, however long it takes you. That's a 4-to-1 return on your money. So if you put $100 in and you take out 500, you just made $400. That's how you have to look at prop firms. That's how you have to utilize them to your advantage. You know, the reason why I'm funded with so many different accounts is because, let's say, for example, I've got 10 accounts, which I currently have 3 funded. I'm working on a 4th. My goal is to get to 10. But why I want to get to 10 is because if I have 10 accounts, in each account, I make $500 for the month, right? If we do the math, $500 times 10, that's $5,000. I'd rather take out $5,000 each and every single month off $100 worth of investment on per account than to try to sit there and take one account from 0 all the way up to 5,000. The odds and the probability of you blowing up that account and losing it are a lot greater than if you just kind of slow down, relax, focus on just trying to make $500. As you get better at this and you get more experience and more screen time, that $500 will go to 1,000. If you got 5 accounts, that's 5,000. If you got 10 accounts, that's 10,000. So you can see how this can quickly start to add up. I would definitely recommend that when you are trading these prop firms, you're kind of leveraging the cash that you're making from the payouts, putting some of that money into your personal bank account, making it real. And then you also want to reinvest, buy more accounts. And then you also want to reinvest some of that into your own personal account to day trade, whether it's stocks or options or futures, whatever you like, guys would like to trade. But again, you have to utilize it as a tool. Now, you know, look at the big picture. If you have a $50,000 account and they give you a $2,500 max drawdown before you lose the account, you don't have $50,000, you have $2,500. So grow that $2,500 first. You know, you want to go 1-to-1 on that $2,500. So stay in the business, stay in the game, make that money. As soon as you can double, triple, quadruple those accounts, then you'll really start to see the benefits. Remember, even though you can make a lot of money very, very fast day trading, it doesn't mean that you need to race, right? There is no race. So whether it takes you 30 days, 45 days, 60 days, like I've mentioned before, make sure that you guys are taking it slow. You guys are playing the levels. You guys are trusting the charts. Just read the charts. You don't need to guess. You don't need to tell yourself, hey, the market's been selling off all day, we're going down. You don't need to say that we're overextended. Just read the charts, follow the charts. The charts are going to tell you what to do next. So if you had this demand zone down here, you would understand that potentially there's a high probability that we're going to bounce out of this demand zone. Whether or not we lose it doesn't matter, because we're just trying to catch this move here. You see this move? We're trying to catch this move here. Now, when you get to the top of supply, doesn't mean that we're trying to break this top supply and trying to play for a home run. We want to be shorting up here, okay? Especially when we're in a range, especially when we're not trending. We want to be shorting down to the middle of this range. We want to be collecting these profits. Collect these profits. Let it come back down to the bottom of the range. Bounce it. Let it come back down to inside the range. Bounce it. When we get back up here into the upper half, look to start shorting it back down into the bottom of the range. Stay consistent. Follow your rules. Make sure you guys are journaling. Make sure you guys are writing down your emotions. I would love everyone to write down, how did you feel when you were in the trade? Were you anxious? Were you stressed? Were you okay? Because that's going to really help you determine, what your max pain is as far as sizing, right? Sometimes people, they open up these accounts and they go 5 contracts deep of the minis. They're down 1,000, 2,000. Next thing you know, they're blowing up their accounts. They have no idea what's going on. You got to get comfortable. If $100, $200, $300 down in the negative, makes you squeamish, go down, size down. There's no rush. Again, I hope you guys enjoyed this video. Make sure to like, comment, subscribe. If you guys want to trade with me each and every single day, join the Discord. I put out live levels like this as I'm trading intraday in the Discord. We talk and kind of BS around with the other traders that are in there. Everyone's learning from each other. It's a great environment. If you guys would like access to one-on-one coaching for psychology, mindset, how to build a strategy, how I use my own personal strategy, this is just one part of my strategy. Again, if you guys would like to learn the whole thing, make sure to join evolutiontraders.com, and I'll see you guys all on the inside.